So NS&I with their premium bonds are raising their price fund yet again from 3.7% to 4%, marking one of the highest rates in about 15 years. This change in price fund rate will mark another £30 million that is up for grab for the general public. The odds of every £1 premium bond winning a prize is finally going down from 24,000 to 1 to 22,000 to 1. This means theoretically that you are more likely to win a prize. However, even though the chances of winning have increased, there is still no guarantee that you will receive a single penny in August's draw in a month's time. There will be 77 £100,000 prizes completely tax-free in August compared to 71 in July, and 154 £50,000 prizes up from 141 in July. There's going to be 308 £25,000 prizes up from 284 the previous month. However, the £1 million prize still remains, again like last month, just for two very lucky winners in the UK. Premium bonds are the nation's favourite saving product, and even if I were to tell you that you would not win anything but you have the chance to win $1 million, that's going to sway you to choosing premium bonds over something guaranteed. For example, fintech companies like Chip, which are giving a guaranteed 4% annual return currently. This is expected to go up as the Bank of England is expected to raise the interest rates again. This is an attempt to reduce the overall inflation, because if interest rates go up, people start to borrow less money and spend less money in the economy. If the price fund rate and the interest rates of saving accounts and bonds go up, more people are tempted to put their money into savings accounts instead of spending in the economy, as we're all trying to buy the same amount of goods with increasing amounts of money as the wages go up, but the amount of goods in the economy does not increase. More than 22 million people in the UK actually put their money into premium bonds, and out of those 22 million, millions by chance do not receive a single penny each month that their money is invested into premium bonds. This does beg the question to whether it's still worth putting your money into premium bonds. While there is a tax benefit of putting your money into premium bonds because every single prize is completely tax-free, there may be better alternative ways of guaranteeing money, especially if you're paying basic rate tax. So I've held premium bonds this entire year, and so far I've had a prize draw every month since January. So I have a holding of around £7,000 in premium bonds, and I'm going to go month to month to show you how much I've been awarded through premium bonds. So in January, I won a grand total of £50, which was super good at the time because I had only around £3,000 invested into it. In February was another win, so that's £25. Again, that £25 really encourages you to keep your money into premium bonds, and I do see why people do keep their money. So in March, again, that was a win, so £100 in March, which was really good, and it really does incentivize you to keep on going. So in April, I actually received nothing, but however, through my previous winnings, I can see the psychology behind it. I kept my money in there. In fact, I kept increasing the amount of money that I put into premium bonds, thinking that my luck would change and eventually I will win something. So as luck had it, in May I received £25, which was really good, and it just goes to show that even if you don't win something, the anticipation, the excitement and the hope of actually winning something is far greater than getting anything guaranteed. I could have put my money into something that was paying around 3% at that time. However, it was more fun and more exciting to know that, you know, it could be £0, it could be £25, or even if my luck had permitted, it could be £1 million. So in June, guess what I got? In June, I got nothing. And again, I told myself, if I kept losing, I'm going to take my money out and put it into something that's guaranteed. In July, however, I received, again, nothing. And you may be thinking that it's tempting now for me to take out my money and put it into something like a 4% bank account. However, now that the price rate has gone up to 4%, I'm thinking again twice, and I will try my luck out with the 4%. If not, I think I will still keep my money until the end of the year. So psychologically speaking, it's really working, and I really want to see what my luck brings to the table till the end of the year. So how do premium bonds compare to the rest of the market, where you can actually put your money into easy access savings accounts that you can withdraw your money whenever and also get a guaranteed amount per year or per month based on how the savings account pays out? Now with light tier, currently they are paying 4.25% annual equivalent, and they actually pay this out monthly. So this is my light tier account. As you can see, currently I have £3,115, and I'm slowly drip feeding money into this because I really like the way the interest works. If you want to sign up, you can use the link in the description down below. However, it's worth mentioning that this this company is not currently FSCS protected. So make sure you consider that even though your money should be safe, it is not protected by the Financial Services Compensation Scheme. However, currently they're paying 4.25% and the amount is always going to be 0.75% less than the central bank's rate. For example, you can hold your money in euros or even dollar. So if I go in, you can see that there is unpaid interest and lifetime interest. So I put in £3,000 a few days ago, and as you can see, each day I'm earning interest. On this amount, I'm roughly getting 36 pence every day. So in a month, that will be around £10.80 guaranteed money. If I put all the money I had in my premium bonds into this, I would be getting around £30 a month guaranteed. However, I do understand the whole chance-based thing. You can earn more than £25. Sometimes it might be £100 or £1,000, which in terms of potential, you might be thinking that is a lot more. But if you actually look at the odds of winning £100, £50 or £1,000, it's honestly so slim that logically speaking, it's much better to put your money into a savings account such as Lightyear or even Chip. So just to show you quickly, £1.45 in unpaid interest. The interest is calculated on a daily basis. However, you are paid out in the first of the month as it shows here. However, the one I would really recommend is Chip, because currently they are paying 4.26% as an annual rate of return. So this is actually more than Lightyear is paying, and I would actually recommend that you put your money into something that is Financial Services Compensation Scheme protected, so FSCS protected. So with Chip, you are earning 4.26% paid out monthly, and just realizing now that this is a better deal than Lightyear, I'm actually going to move my money from Lightyear into Chip just after I finish filming this video. However, the benefits with Lightyear is that you can invest your money too, but I would rather put my cash in this. So with Chip, you can deposit and withdraw almost instantly. Sometimes it might take a day or two, but you will get your money, and you can start with as little as £1 all the way up to a massive £250,000. Now you can use a little calculator thing here to see how much you could possibly earn throughout the year. So if you deposit £100, you should be earning £42.60 in interest over the year, providing that the rates don't change, providing the rates don't lower. These fintech companies pass on the interest rates quite quickly. So if the interest rate actually drops, they will also drop that interest rate. So with £5,000, you're earning £213 interest. That is around £17.75 guaranteed, instead of trying your luck with premium bonds. So then we ask ourselves again, is it worth putting your money into premium bonds where the majority of people don't actually earn anything? So just to put it into perspective, 2 people out of 22 million people will actually earn the £1 million prize, and the chances of winning are extremely thin. Now is one of the better times in your entire lifetime to actually put your money into bank accounts which are paying in excess of 4% for instant access savings accounts. Logically speaking, put your money into an instant savings account or even the stock market in the long run to earn more return on your money. However, the allure of winning £1 million or even £100,000 is too great for too many in the UK, and therefore premium bonds remain one of the most popular savings products in the UK, although I wouldn't really consider it a savings account because it doesn't even beat inflation for the majority of people. So make sure to check out some of my other videos, and I will see you in the next video. So if you've reached this far into the video, I would like to thank everyone watching so much. This channel has grown much faster than I could have ever anticipated, and honestly it's giving me more options in life, and I hope that I could keep continuing to make these videos. So if you do appreciate these videos, a like would be amazing and a subscribe would be even better. Also, I would like to thank Castilla for all the support. I really appreciate it.